Welcome to weekly view on markets. Nifty closed this week at 17,558 with a loss of 1.12%. Bank Nifty and broader markets outperformed during this week. Bank Nifty gained about 1.2%. Nifty Midcap Index gained about 0.35%, and Nifty Small Cap Index outperformed the market with gain of 1.47% during this week. India VIX, that is the volatility index, continues to be at elevated level of 18.2. Like previous week, there is not much change in the volatility. The volatility in the market continues to be high with wide intraday swings. This makes the market very difficult for the traders as it is difficult to take buy and sell decisions in the live market due to high intraday swings. Now let us look at Nifty chart. I'll open the Nifty chart. This is daily Nifty chart. Here we can see Nifty has consolidated during this week. You can see the size of the candles have become smaller, indicating there is a consolidation in the market. Nifty has a support at around 17,350 to 400 reason, and if Nifty breaks this support, the next support level is at 17,200. Support at 17,200 looks quite a good support. If we look at the earlier from where I have driven this support line, when Nifty was at 17,200 in the earlier days, there are a lot of candles we can see here which have a high lower shadow. So this indicates that there is buying support for the market at lower level. Whenever the price is falling to a lower level, immediately people are buying, investors are buying, and the price is moving up and closing. So this high lower shadow on the candles at around 17,200 levels indicates a good support and buying support for the markets. And market has immediate resistance at 17,800. So this is a big resistance for the market. This has to be crossed. After that only we can think about higher levels. Now let us look at the weekly chart of Nifty. During this week on weekly chart, Nifty has closed above the cloth line of this flag. That means the positive trend still remains intact on Nifty. Now let us look at Nifty mid cap index. Mid cap index also, if we look at this mid cap index also closed above the crucial support levels, indicating that the positive trend remains intact. Now let us look at Nifty small cap. Nifty small cap index also we can see the up move and small cap index closing at higher levels every day. So if we look at weekly chart, we can see a good uptrend in Nifty small cap. Let us look at different sectors in the market. During this week, banks have outperformed the market. Among the banks, the PSU banks were the star during the week. They have posted a gain of 4.4% for the week. And the energy companies ended with a gain of about 0.9% for this week. Pharma and healthcare sector dragged the market with a cut of about 1% during the present week. The market may go down based on certain global developments. This week, market was guessing what is going to happen in the US Fed conference at Jackson Hole. The US Fed chairman was to make a statement, and market was expecting that he will make a hawkish statement due to the high inflation in US. Exactly that is what has happened when US Fed chairman made a statement on Friday evening. He said that inflation is very high and economy is growing and they have to tackle the inflation, and he has set a target to bring down the inflation to 2% and raise interest rates to tame inflation. This may cause some hardships to US economy and the common people in US. So this has spooked the US markets on Friday night and we have seen sharp correction. Our markets also may see a knee-jerk reaction, but Indian macro and micro fundamentals remains quite good at this point of time, and market is trading at a fair valuation in India. So any knee-jerk correction will be a good buying opportunity. It is a buy on dip market in India. So let us look at some of the fundamentals. Nifty is trading at a fair valuation at present. I have compared Nifty levels and valuations at the beginning of quarter one result season and at the end of quarterly results. In the second week of July, Nifty was trading at around 16,200. From there, Nifty has rallied to 17,558, about 1100 points. But Nifty PE has gone up from 20.03 to 20.96. The present historical PE valuation is 20.96. There is not much change in valuation. That means though Nifty has rallied 1,100 points, the valuation is not very expensive. On a price to book value basis also, Nifty valuation has gone from 3.91 to 4.1. Now let us look at mid cap valuation. During the result season, mid cap rallied from 27,900 to 31,112. And Nifty P value has gone up from 21.7 to 23.72. On price to book value basis, the mid cap index was trading at 3.11. Now it is trading at 3.32. On a price to book value basis, mid cap index still looks fairly valued. It is below 3.5. So still it is a good valuation in Nifty mid cap index. Nifty small cap index has gone up from 8812 to 9596 during the result season. The PE value of small cap index has fallen from 19.38 to 17.51. Price to book value of small cap index has gone up from 3.12 to 3.23. So comparing to the all the segments, small cap is a sector where you find uh, value attractive at present. Now, if there is any correction from here, the Nifty valuations become attractive, and informed investors will try to buy the dip in the market. So that is the reason I am saying that any drop in the market valuation will be a good buying opportunity, and we may not see the market trading at lower levels for a long time. There will be a immediate pickup from the lower levels. I have tried to calculate 1 year forward uh, PE of Indian market, that is Nifty PE, considering a growth in earnings of around 15% for this year. 1 year forward valuation comes to around 17.8. So this valuation looks quite fair valuation when compared with earnings yield of bonds and fixed income assets. It is slightly uh, around 200 basis points higher than the earnings yield of fixed income instruments. But equity is a growth uh, instrument, unlike the fixed instrument. The growth in instruments always commands a premium. So my study says that presently the Indian market is trading at a fair valuation. It is not very expensive, but not very cheap. Any correction from here will make it attractive, and informed investors will buy this market. So my advice to all investors is that if you get a chance to buy at lower levels, please go and use that opportunity to buy in the Indian markets. Select good sectors and good companies and buy. It will be a good opportunity to invest. This is all for this week. See you next week. Thank you.